Csca. Identify and explain the role of the finance team in the strategic planning process. The finance team plays a critical role in providing reliable financial and non-financial data to support strategic analysis. During environmental scanning and internal assessment, finance professionals supply historical performance data, cost structures, profitability analyses, trend reports, and ratio analysis. They help evaluate strengths and weaknesses through margin analysis, working capital assessments, and capital structure review. By transforming raw data into meaningful insights, the finance team ensures that strategic discussions are grounded in objective evidence rather than assumptions, enhancing the quality and credibility of long-term decision-making. A key responsibility of the finance function is ensuring cash availability and financial capacity to implement strategic initiatives. Strategic plans often require capital investments, acquisitions, technology upgrades, or market expansion. Finance evaluates financing options, assesses capital adequacy, manages liquidity, and determines optimal capital structure. Through forecasting cash flows and modeling funding scenarios, the team confirms whether the organization can sustain planned growth while managing risk. This stewardship role ensures that strategic ambition is aligned with financial feasibility and long-term solvency. The finance team also provides financial evaluation of new opportunities and strategic alternatives. Using tools such as net present value, NPV, internal rate of return, IRR, scenario analysis, and sensitivity analysis, finance professionals assess the expected return and risk profile of investments. They incorporate qualitative considerations, opportunity costs, and strategic fit into their analysis. By quantifying projected outcomes and comparing alternatives, the finance team supports informed decision-making and helps prioritize initiatives that enhance competitive advantage and shareholder or stakeholder value. Beyond planning and analysis, finance is responsible for monitoring execution, measuring performance, and reporting results. This includes preparing strategic financial plans, annual budgets, variance analyses, and balanced scorecards aligned with strategic objectives. Finance tracks key performance indicators, KPIs, evaluates profitability, liquidity, leverage, and efficiency metrics, and communicates results to leadership and the board. By providing timely feedback and analytical insight, the finance team ensures accountability, facilitates corrective action, and contributes a disciplined, long-term financial perspective to the overall strategic management process. Csca. Distinguish between vision and mission. A vision statement describes the organization's desired future state, what it aspires to become over the long term. It is forward-looking, inspirational, and strategic in nature, providing a clear sense of direction and long-term ambition. The vision sets the destination toward which strategy is directed and often reflects aspirations related to market leadership, innovation, social impact, or global presence. A strong vision motivates stakeholders, aligns leadership decisions, and establishes a unifying theme that guides strategic planning and major resource commitments. Mission statement, in contrast, defines the organization's present purpose, why it exists and what it does. It identifies the primary customers or beneficiaries, products or services offered, and the value delivered. The mission is more concrete and operational than the vision, serving as a foundation for daily decision-making and resource allocation. It clarifies organizational identity and scope, ensuring that strategies and objectives remain consistent with core purpose and stakeholder expectations. The key distinction lies in time orientation and focus. Vision is aspirational and future-oriented, articulating where the organization intends to be, while mission is present-oriented, explaining what the organization does and for whom. Vision drives long-term strategic direction. Mission guides current operations and boundary conditions. Together, they provide coherence in the strategic management process by linking purpose, mission, with ambition, vision, ensuring alignment between current actions and long-term aspirations. Csca. Demonstrate an understanding of how mission leads to the formulation of long-term business goals. The mission statement establishes the scope and boundaries of organizational activity, directly influencing long-term strategic choices. By clarifying customer segments, value propositions, and core competencies, the mission defines which industries, markets, or services the organization should pursue. From this foundation, management formulates long-term business goals such as diversification, product development, or geographic expansion. For example, a mission emphasizing innovation may lead to goals involving new product lines, research investment, or technology partnerships aligned with that purpose. Mission-driven strategic planning also determines whether to add, delete, or reposition product lines. If certain products no longer align with core purpose or fail to support long-term value creation, divestment or restructuring may be appropriate. Conversely, opportunities that strengthen the organization's ability to fulfill its mission may justify market penetration strategies or acquisition of complementary capabilities. Thus, mission serves as a decision filter, ensuring that growth initiatives reinforce organizational identity and sustainable competitive positioning. In addition, the mission shapes decisions regarding market penetration and competitive positioning. When pursuing new markets or customer segments, management evaluates whether expansion supports the organization's stated purpose and long-term direction. Mission alignment helps avoid strategic drift and protects against entering markets that dilute brand identity or overstretch resources. Ultimately, long-term business goals, such as diversification, innovation, or international expansion, must logically flow from and support the mission to maintain coherence and strategic focus.